Truist Wealth Chief Investment Officer, Chief Market Strategist, Keith Lerner. Keith, so you say maintain this equity bias. Talk about that, what you're telling your clients.
Yeah, well, great to be with you. When I was on set with you last month, Charles, we said the bull market deserves the benefit of the doubt. And I mean, you really hit on the key factor. We have all these different risks going on, but what's the most important thing for markets? It's profits. And we are having a profits boom, as you just mentioned. I'm going to just add to one of the comments you just made. Since the beginning of this year, the forward earning estimates for the S&P have been revised higher by 12%. That's the highest upward revision we've seen in our database going back the last 20 or 30 years. So if you ask why the market's doing so well, it's the profits that you mentioned earlier.
So let's pick up on that, because right now we know AI infrastructure, right? That's your profit. That's driving all the most of the profits right now, the lion's share. But also, you like other sectors, right, in this market as well. I want to bring this table up, too, because you've got an attractive on technology, but also energy, also materials, and also industrials. What sets those sectors apart from the rest?
Sure. Well, the first thing is we've had that long-standing overweight on tech for some time, because every bull market has a dominant theme. And the dominant theme of this bull market, as we've just discussed, is AI and tech. That's where the strongest earnings are. The other sectors are also part of the build-out. Think about infrastructure, materials, so kind of tech adjacent. And then energy, in our view, is more of a hedge in case some of these geopolitical concerns flare up again. And we upgraded that on the pullback. So all in all, it's balanced. But I would say we're still very positive on the tech sector longer term as well.
Let's talk about the market, this kind of a market that's already ramping up. How do you accelerate it? How does it keep accelerating from here? You talk about some key upside risk. Technology weightings, do you think people are okay now with that? For the last couple of years, a lot of hand wringing over that, but I don't hear that as much as I used to.
Yeah, it's it's not a bug. It's a feature of this bull market. Listen, I want to be respectful that and balanced that. We've had a nice run off the lows. Are we going to see some setbacks? Are we going to see some more curveballs this year? Certainly is the case, but. I mean, I think at this point, here's an interesting perspective, Charles. Because of those earnings are being so strong, as we made a new high more recently, we're about 5% above where we were last October. The valuations are actually lower, right? Lower than they were last October, right, because those earnings have been so strong. So all we need to do is kind of keep the multiple, maybe a little bit multiple expansion, and keep those earnings going. And to us, that suggests we still have some upside before year end. Again, not in a straight line, but we still think the bull deserves the benefit of the doubt.
I got less than 2 minutes, but I want to ask you two things. First, about the economy. You're essentially saying, hey, listen, you got geopolitical uncertainty. We know that. In crude oil, maybe that won't be a big deal. We'll see how that resolves itself. But on the bottom, these tax incentives, the CapEx spending, the wage growth, those were strong tailwinds coming into the year. And I think a lot of people have ignored the fact that they've remained in place.
That's right. When we go through a geopolitical event, it seems like, the last couple of months, people were saying Iran was the only thing that matters. And this table that you're looking at of the stoplights shows there were other factors. The tech spending as a percentage of the economy is the highest we've seen over the last 30 years. It's actually higher than what we've seen in the 90s. So this is a once-in-a-generation build-out as far as this AI side. Right. So I just want to lose, those other factors actually matter quite a bit.
Keith, I got less than a minute to go, but let's circle back tech, because you talk a lot of tech in this opening. Listen, it's all about tech, but are you concerned about the sort of the financing and some of the valuations, particularly OpenAI? So some of these companies, OpenAI, a lot of people are still worried about them, even more so. Microsoft's got a lot of money coming from them, Oracle, potentially, Amazon, potentially. How concerned are we with these sort of arrangements?
Yeah, we're watching it with a close eye. The circular financing does raise an eyebrow, but I would also say, Charles, the reason for this is there's real demand, and it's demand today for compute, for building out the infrastructure and so forth, and the earning trends are still there. We're watching free cash flow, which has been coming down somewhat, so that is a concern, but not enough to say to us that we should be negative. But again, keeping a watchful eye on these relationships.
Keith, thanks a lot, my man. Good stuff. You've been killing it. And by the way, those reports are monster. They're beasts. I appreciate them, though. Thank you.
Appreciate it. Thanks so much, Charles.
All right.